Well, welcome everyone to today's webinar on bank account and portal management. This is Brian from Strategic Treasurer, and we're pleased you could join us as we discuss the tools and approach required to manage bank accounts and portals properly. Our speakers for today are Kristen Cifaldi, Director Product Development and Analytics at Strategic Treasurer, and Craig Jeffrey, Founder and Managing Partner of Strategic Treasurer. Welcome, Kristen and Craig, and I'll now turn the presentation over to you.
It's great to be here. So today we'll be talking about bank account management and portal management. We're going to go over the scope and challenges. We're going to review some leading practices on how to optimize account management processes. We'll discuss how to determine the need and when to implement a bank account management system. And then we'll be discussing key takeaways and final thoughts. So bank account management refers to processes and systems used by corporations to manage bank accounts efficiently, including account openings, maintenance, security, and compliance. So a full service, either system or process that you've got within your own company. And we have to remember, why is it important to manage our bank accounts and to keep an eye on them? Every bank account represents a point of exposure for risk, fraud, or compliance challenges, and a point of cost, fees, maintenance, operational expenses associated with keeping those bank accounts open and safe. And when we have proper bank account management, we ensure we're optimizing cash concentration and liquidity. We have efficient processes in place to reduce banking costs. We've maximized our interest income with minimum idle cash. We're implementing strong internal controls to mitigate risks, complying with regulators, and we're ready for audits, internal and external. And we're better able to make strategic decisions with clear account visibility.
Yeah, I think that's great. I mean, many people here have a huge number of accounts, maybe with multiple banks. And so what are some of those challenges that makes bank account management difficult or makes it easier? And as you look at the screen, you can see 5 different areas. Now, there are other aspects of bank account management that we haven't put on here. So just recognize we're not trying to be exhaustive in our coverage or exhausting, but hit on some of the few key areas. As Kristen had mentioned, some of the topics and what's key for bank account management. One other area that's really a broader category would be, managing banking relationships, staying important to those banks that are important to you, doing that efficiently and over time. So those are some of the categories that we're not necessarily focusing on for today's discussion. But what are some of the challenges? So the first one we're looking at is the lack of account connectivity. Can I see all of my accounts on a daily basis across the globe? Does that help me look at where my liquidity is, where I may need to move it? And I'll just give one example where this can be a challenge. One of our clients, we did an assessment and a review, and we found, while there was some view, there was no connectivity to one of the accounts, and this account built up year after year. Money was being deposited into it. It was not being concentrated. It was just reporting, and it had gotten to the point of over $250,000. With maybe $70,000 to $80,000 moving into it each year at about the point that we had looked at it. And so connecting to your accounts, seeing where the cash is, using that most effectively is one key area. We need to see it. It's a foundational principle that if you have an account, you can see its balances and the transactions on a daily basis. And so that's a core governing principle. The second area has to do with banking structures or disjointed banking structures that can make life more difficult. Now, think of it as a continuum when you have your banking structure. A very small organization may have a single operating account. Everything's deposited into it. All the disbursements come out of it, from payroll to receipts to investment activity. Everything's in a single account. But as that grows, you might have more entities. You have dedicated depository accounts, dedicated disbursement accounts, but they may not be organized efficiently. And if you think of the people, processes, and efficiency as a governing concept for many things to do with finance or business operations, in treasury, we have to think of people, processes, technology, structures, and there's some more as well, but you have to think of structures as well. Your structure will help you manage your bank accounts more effectively. It'll help you with your controls. It'll help you with visibility and the ability to forecast. And so a reasoned, structured, well-structured banking setup will help you with visibility, help you make those controls. So that's a challenge that exists in many organizations. It doesn't arise overnight. It arises over time. As companies grow, they acquire other organizations, and then they just bolt these on without necessarily rationalizing or optimizing what that structure is. So that's another area that creates a challenge. When they're disjointed, it's harder to see and harder to act. It's kind of like working with a messy desk, as some of you know. What about weak internal controls? Internal controls have to increase to address the threat that exists today with criminals and even insider issues that can exist. Weak internal controls lead to funds loss, lots of activity, even if you don't lose funds, trying to do this post-potential threat issue and manage it. And a loss of funds always leads to reputational damage in addition to perhaps financial loss. And that lack of confidence internally is a reverberation of that. So weak internal controls can be another threat or challenge in managing bank accounts. Inconsistent procedures, I don't want to spend much time on that. It's, if we have inconsistent procedures, security measurements, those types of things render challenges for efficiency, for control, whether it's accounting, whether it's protecting against payment fraud. That's really significant. So, one aspect that may link inconsistent procedures with disjointed banking structures, you may have a policy, or maybe you don't have a policy, but you think or believe you should have debit filters on these types of accounts, electronic pre-authorization, electronic positive pay on these other accounts, and these other services to be consistent across your structure. The procedures and the banking structures all need to fit together for that. And the other area that's a real significant challenge for many organizations is limited resources for bank account management. This is a real significant issue, especially when you think about, I'm managing all these accounts, signers change, services change. We have things like FBAR that we have to manage. There's all this movement. We acquire another company. All of this activity has to be managed effectively, and we have 6 portals that we're managing with signers in different areas. Those have to be kept up to date. It's very difficult to maintain all of that for many organizations to stay on top of it. So those are some of the core challenges that we see in bank account management.
Thanks, Craig. And this will move us to our first poll question. Remember, you have to submit answers to all 3 poll questions today to earn your CTP credits.
All right, so this one is a select all that apply. You can select all of them. Hopefully you're not selecting the other insure and the other ones, but our banking complexity situation is that our company, and then you've got issue payments out of 3 or more banks, use 10 or more banks, have 100 or more bank accounts, and work in treasury tech. And Brian has cleverly placed some instructions in case you can't see the poll or quiz that appears on the screen. All right. Excellent. When you're done, hit the submit button. And if you're interested in seeing all of the results, please type the acronym BAM in there. And let me just see how many we should have answer. Let's say we want 100 and let's do 200. 200 people need to type
BAM.
BAM in there. That's fine. That would be great. So, Kristen, we've got a lot of responses. Number 1 is issue payments out of 3 or more banks. That's pretty complex by itself. Use 10 or more banks, just about a third, and have 100 or more bank accounts. It's almost exactly 1/3. It says 33%, and a quarter work for a treasury tech provider, banker, consultancy. So this is this is a way of isolating yourself out of the list for the others, which means you would increase the numbers. And so the 33% would be about 44%, about 4/9. 31% would be about 41%. And then it'd be like 75, 76% of the others. So this is an extremely complex
Complex
group. Yeah. All right. So thanks for answering that. We're going to go ahead and close that and move ahead to core elements, Kristen.
Yeah, core elements of effective bank account management. So the first thing is our account structure, making sure that we have that solid foundation. Are we able to understand and access and see the accounts by type, group, bank? Do you have centralized or decentralized cash concentration strategies? Any other suggestions on account structure there, Craig?
Well, yeah, that continuum from, I have a single account to maybe I have a global account structure where I have, pooling arrangements, I have header or concentration accounts. There's a whole continuum there. I think one of the key things is making sure you're positioned in the realm and range of where you need to be. I think that's key. Some companies we see, they start and they wait a long time to make a change. Others move to adding a lot of counts extra, maybe years ahead of time. So it's recognizing there's a continuum. What's the next step is probably one of the key things here.
Perfect. And the next part of that core elements would be access and authorization. So assigning user roles and permissions appropriately and having a constant review of the user roles, making sure we've got policies in place to remove users as they take on new roles or potentially leave for another organization or retire. And do we have 4 eyes policies in place for moving money? And then what are those approval workflows? Are they working through your bank account portal? Do you have a treasury management system? What are the dollar amounts that need to, have a single or a dual authorization on them or even more? We also have cash management policy under our core elements. So being able to track liquidity easily. Are you doing that in Excel spreadsheets? When you get more complex with the accounts, do you have to spend hours pulling it down from portals and working on it? Has that been optimized so that you can know your position easily and quickly when you need it? And how accurate is the cash flow forecasting? How accurate do you think it is coming out? And that's the same thing. The more complex and the more steps that you have, if you're downloading things and dumping them all into Excels, it might be time to consider moving towards some sort of bank account management system so that you can increase your accuracy there. Regulatory compliance. Are you able to easily adhere to regulations and internal policies? Do you have transparent reporting and disclosures? What's the ease of getting that information out? Will it take you days, hours, minutes? And then most importantly, I think risk and security controls. Have you set appropriate transaction limits? Are there alerts, automated alerts? Are there secure access measures, tokens, MFA? Has this been put in place? And then are you leaving audit trails so that you're able to comply with internal and external audits? And then in case anything happens, can we trace it back to maybe where the problem started? Anything to add on security, Craig?
Yeah, on the security side, there's 24% are people from technology vendors or banks. And so this is really addressed to the corporations, those people that are responsible for stewardship of their accounts. The banks offer a lot of security services. They offer information reporting. Those are all items we would consider standards of good corporate conduct. They're commercially reasonable that you use the security features and services they have. Now, that's not to say you can't argue about pricing with the banks, but those are not services that you should ignore when they bring those up. Those are for your protection. They don't cost very much, and they provide your organization with better protection. Once you have a problem, you realize I could have paid for that service or all those services for years, decades. That would have saved me a lot of problems. So when your bankers are talking about those things, it's worth talking about and always get the best deal you can. But those are really good security features that the banks offer. In addition, this idea of I get the data, I do a daily cash proof. I see what's come into the account each day, what the balance was. Is that what I'm expecting? Are there going to be any changes? Is there anything that's anomalous or a potential issue? These are all good things, and those fit into access and authorization, risk and security controls. Those are a few of the other items that I think we all need to just continue to focus on.
Great. And so when we're setting up our organizational operations, there's several areas we want to take into account while we're mapping things out or reviewing for an audit. What is the banking structure? How are you grouping the banks? And this might be quite simple if you're just using one or two banks domestically. It can get complicated if you're a large multinational corporation. And then what banks are within those groups? And then down into our bank accounts and how are those rolled up and organized? What sort of structure are we using? Are we using ZBA or other sweeping structures, overnight investments? What sort of money needs to be left in the account overnight to meet our obligations the next morning? And then we look at entity structure in a very similar manner. And if if you're just a single entity, this can be really easy. But as I said, if you're a large multinational corporation with many subsidiaries, we want to have some sort of structure, some clear grouping, and then have that roll back so we can see our cash concentration strategy from all our sub-entities. Anything else to add on those points there, Craig?
I'm not sure. As you were talking through these dimensions of the banking structure, the entity structure, users, those are all different ways that we can flip how we look at things. And I think it's important that we know that there's some complexity to it. Yep. It's not just, I have one account, one service, one person. You want to put this in place so that there's good visibility, there's control. But there's other principles there. There's principles of segregation of duties. So there's 4 eyes or multiple people doing it. There's also the principle of least privilege. Not everybody needs to see everything in every single account. There's a lot of confidential information that you should make sure you're getting to the people that need it, but only to those who need it. And so those have to be factored in on this. I think the other piece too, when you look at how you cover these accounts, is whether you're using a bank portal, which you'll use bank portals, whether you're using a treasury management system or a treasury visibility tool, you're setting these structures up. And it has to be, you have to contemplate that activity. And so when you have to contemplate that, what does that mean? Can you put things in groups? Can you put accounts? Accounts obviously relate to entities, and entities might relate to super entities or other entity groups. Same thing with bank accounts relate to banks. Bank account relates to entities. How you group and classify those, and the fact that maybe your bank portal can or can't put those groups, that'll have an impact on how efficiently you can run these different dimensions. So instead of having 100 accounts with 10 banks and all the users and having to make 1 million clicks to make sure they're right, there's ways to put groups, tasks, entities in an efficient way. So you don't just have to copy one person over, someone replaces, which is a nice feature, but also so you can manage the dimensions gracefully.
Yep. And some of this also, especially the authorization and signers, making sure that that's set up properly can make it easy for you to do things such as FBAR in the future. So if you have those signers categorized in your system, or, if you're exporting and doing that manually, having some way to easily get at who might be an FBAR eligible signer would be important to consider here as well.
I think we need to do a count how many times you and I say FBAR in this. It is that time of season.
It
it's
is
tax.
April 15th.
I think you were doing that before you came in here today. So excellent. So
here's our second poll question. And this one is, we manage our bank accounts using the following, and it's another all that applies. So feel free to click multiple options if that applies to you or your organization.
And when you're done, go ahead and submit them. I would also say that we need 67 more people to type the letters BAM in the chat box. That lets us know that you're in the right room, that you're paying attention, and that you like data like we do. There you go. Look at that. You got to love it when you see all those BAMs going through. Capitalize, uncapitalized, lovers of data. This is good stuff. And it's also good to keep Brian counting well.
And I did see Brian said we have enough. So
we have enough. So
everyone's
we're already
going to get that data.
We're over 200, over 210, going for 250. Kristen, you want me to start on this? Or what would you like to
go
do?
right ahead.
All right. So how do we manage bank accounts? Number one, 53% Excel or database, so homegrown. So this is the reality. That's a huge number. Number 2 is a treasury management system. This number has gone up significantly over the last 10 years over time. Number 3, as you can see, is digital files. So we use digital files to store, let's say, scans of documents to keep track of it. That number should get to 100 at some point. Number 3, other or insure. Dedicated BAM system, 14%. That's increased over the last decade, not nearly as much as treasury management systems. And then using a legal system is just about 10%, 9% there for using a legal system. And we outsource the service, very limited at present. So sometimes you outsource it and use an internal system, EBAM, IBAM, whatever system for using that. So very interesting to see what people are using. So there you are. There you have your audience, what people are doing. So thanks for responding to that. We do have enough responses, and we'll put in the chat box again a link to Strategic Treasurer on LinkedIn. If you're not following, or if you just check to see that you're following Strategic Treasurer on LinkedIn, that would be wonderful. So just click it, see if you're there, and we'll move forward from that point. So that brings us to leading practices. What are the leading practices? What should we be doing to be doing, being a good steward of our time, our resources, from a control, efficiency, a scalability standpoint? I'll cover these items. First, strong bank controls. I already gave that pitch. So all the bankers should be delighted, use the services they offer. They prevent fraud, they reduce errors, debit filters, debit blocks, electronic pre-authorization, debit filtering, electronic debit filtering. All of those are very good services to look at and to use. So I've already covered that, and I already gave an emphasis on it. So policy standardization is making sure that you have a design for your banking structure, and you put policies not only for the banking structure, but how you do things like reconciliation, bank account reconciliation, how you set up accounts, how you do your internal audit or your review of accounts. Are you doing all the accounts twice a year? Are you doing half of them, half the year, half the other year? So you're going through those each year. But your policy on bank account management and bank relationship management should be standardized, should be understood, and you should have consistency across all bank accounts. And this follows from Treasury as the owner of cash. And as the owner of cash, you have the responsibility to control it and to set the standards. It's not an ask, it's a determination of what needs to be done. There may be some regional differences that you incorporate into that, but making sure that there is consistency from a control and a policy standpoint. Maybe a few adaptations or options within those regions. That's pretty important. And what's a leading practice? Your design of your banking structure and how you manage bank accounts should be designed for treasury purposes, to manage idle cash, optimize liquidity. It's not designed for accounting, but you should not break accounting. And I think that's really important. It has to operate so that operational areas, accounting, and controls work. Those are all part of the purview or the remit of Treasury, but it has to be optimized for cash concentration. Number one, but not to the exclusion of the others. And I think that's important because sometimes there can be a discussion of who drives everything, and it's not one part is maximized and everything else is zero. It's optimizing cash concentration in light of those other areas. That fourth area, you got the three orange-colored, people sitting there, institutional knowledge. How often do you really think about that? How does the organization understand your banking structure, your bank accounts? Oftentimes, there are the treasury geeks, many of whom are on this call. There's only a few people who understand the details and maybe even understand the structure, and everyone else is confused by what Treasury does. Now, there's going to be some details that people that are deep involved in it know. But what's really important here is that the organization and the institution needs to understand how cash flow moves to the organization, what are the key principles, and how it works. Not at the level of detail as Treasury, but that has to be documented and understood so that others know what's going on. That is, I would say, not rarely the case, but it is the minority of times in the minority of companies is that well known and well understood. So make sure that that's the case. Things change over time. People need to understand the flow. They're not going to be Rain Man or Rain Women knowing all of the movements at the level of detail that you have, but they should still have a major picture for that. And then I think our count for FBAR is up to what?
Yep, we're up again.
We're up to 400. Report on foreign bank account reporting, foreign bank and financial accounts. There's also beneficial ownership information, or BOI. There's a few actions on BOI as well, but those are certainly things to know what your responsibility is, what's included. Same thing with FBAR. Most things that are, when we talk about FBAR, most people are far more confident about what FBAR says than they are knowledgeable. When we did the last FBAR one, we went through a bunch of the, not nerdy things, but some of the detailed things, because there's so many things that are true in terms that you use in Treasury that are different from what FinCEN says. And that's important because we can be overconfident because we know terms because of Treasury, but then FinCEN defines something differently. And it's like, okay, they're using that same word that we use differently, and it means other things, so we have to understand it. So that's another piece. And then the KYC activity. Your bankers are doing this. Maybe your bankers have a good system of you're loading everything into a portal. It's helping to make sure things are complete. And instead of taking 5 months to open up a full account in another country, it's only taking 2. Maybe have some activities there. So leading practices are, ensuring that you're complying with FBAR and now beneficial ownership information reporting, KYC, and you do it in a systematic way that can help you whatever bank you're connecting with. So those are five key areas. Kristen, any, I know you're going to want to say something on FBAR, maybe not, but any thoughts on this?
I think the know your customer is pretty important to make sure that those are, uploaded or in your banker's system, just as you mentioned, like if we can help speed those account openings and closings, then we save ourselves times and headaches. So just having a good system, I think, to maintain all the documents that you need to comply with your bank's requirements. And that leads us to governance and control. And so authorized signer management, mentioned it earlier, make sure you have processes in place to, timely remove folks who have moved to a different department, out of Treasury, and that you're not leaving folks on there, and that impacts fraud, and it impacts your reporting. This is another, we'll use FBAR again. You don't want to leave FBAR people on if they've left your department. You want to have these processes in place to strengthen your fraud prevention and security. And a good way, also here is to enable notifications via feed or email if that's possible, through your bank portal or your TMS or any system that you happen to be using. We also want things integrated right into our general ledger. We want to have a 1-1 relationship between the bank and ledger accounts to avoid confusion. And we want to ensure seamless reconciliation and cash flow accuracy if we can here. So making sure that where it's possible, you have those feeds integrated, even if you're using your own homegrown database. If you've got IT folks that helped you create that or help you maintain it, can that be integrated into other systems that you're using, or can those reports be automated or sent out to folks who need them that would need the general ledger information in your accounting team? Tracking and system visibility, leveraging a TMS for automated tracking tools. This helps improve oversight and operational control. And a good example of this is we had a client that had not had a TMS, and through the process of implementing one, they found a bank account that they thought they had closed several years prior. This also emphasizes the importance of bank account audits. But the account just sat there open, and it was accruing fees that they were paying that they didn't know. And once they were able to gather all their accounts, they were able to close it and recoup only 12 months of the fees from the banking partner. But if you've got in manual ways of tracking things and you've got accounts spread out over the globe, it's hard to see something that you might have thought was closed, and then to go back and prove to the bank that it really was closed so that you can get, a refund on some of your fees. You have to pull all those documents, whether they're paper or saved all over the place. So just knowing that if you have an easy way to track, this is a good thing to leverage a TMS or bank account management system for. Audit and compliance. These systems will help you enforce regulatory and internal control standards if you're using one, and help identify risk and enhance process efficiencies. And this goes back to the slide where we were talking about mapping, and if you have the ability to put entities, banks, users into groups and define roles there, that's very helpful. Enhancing your security features by enforcing multi-factor authentication for added protection. And again, we're talking about a bank account management TMS system or bank portal here. We want to be able to prevent fraud. Craig has talked a couple times about the products that the banks offer to help you with this. And then always segregation of duties and least privilege access, especially for those who can move funds. Anything to add to that one?
I would, no, but I would jump up to the general ledger integration, because you said something that's important about maintaining a one-to-one relationship. Every bank account should have a GL cash code. And so maybe you're sitting there saying, yes, I agree with that. And so I don't need to convince you. But what about the accountant who says, we don't need to set those up? Why should we set up more? If we have, let's say, 3 accounts are part of a ZBA structure, and we reconcile those together, we own the GL, and so we can put those in one because they're all reconciled together, they're pulled together. And I would say this to that response is, one is that Treasury is the owner of cash, and part of that is how cash is set up, how it's controlled, including the GL cash codes. Now that may seem like heresy to those who are in the accounting domain. My formal training was in accounting, but here's why this is essential. Maintaining that one-to-one relationship is consistent, and it's helpful for a couple ways, especially when we consider the fact that things can go haywire and out of control at different times. It's a good prevention. If you have a one-for-one relationship, you have visibility to every single account in the general ledger. And you gave an example of, we found an account in this company or that company because they were combined in other common general ledgers. And so when you take something over, some institutional knowledge is lost, you can't discover them. You can see them on bank statements, you can see them on account analysis statements, you can see them in the general ledger if they're all there and if you have access to all of it. So that's one reason. Second, the fact that you have a one-to-one relationship doesn't mean that the reconciliation group can't combine 3 cash accounts and reconcile them together. They can. But now it provides the booking will occur to each cash code. So there's control purposes, it keeps it clean, it keeps it isolated, and hopefully you're using automation that makes that easy. And so that's another area where the general ledger integration and the one-to-one relationship matters. And so that is what the standard is. It's to me, it's, and to our view, it's for every bank account, you have, if it's a operational bank account, you need to have visibility to it on a daily basis. That's a cost of doing business. It doesn't mean you don't work to get the best price on it. Just like reconciling an account, you don't say what's the cost-benefit analysis of reconciling your bank accounts, monthly or weekly, whatever the need there is. That becomes a standard of, well, GAAP would require that. We have to be able to prove and show what happened. So too with Treasury, we need to be able to see that account information and have visibility to it through the GL.
All right. Portal management. I like the tagline, BAM without portal management isn't BAM. So when we're within our portals, the distinction between signers and digital signers is important. Would you like to throw some color on that, Craig, for me?
Yeah, so if you're in Treasury, you probably think that bank account signers are those who have signing authority and are on record at the bank with that information, and you would be right. But when we talk about digital signers, that's brought up again for the favorite word we're bringing up today. Second favorite acronym is FBAR, right? So in FBAR, FinCEN records signers are those who, a digital signer, a portal signer, we're using those terms, are those who by themselves or in conjunction with another person can move money. And so you don't have to be a physical signer. You can be a portal user, which you may not be a signer in the bank system. You may not have a signature card, but you're given that authority on the system. And so therefore you're a digital signer. And therefore, as a signer, a FinCEN signer, you would fall under the governance of the FBAR reporting for the foreign bank accounts. If the accounts qualify, you are a signer. Even if you say, and even pounding the desk saying, but I'm not a signer, you're treated as a signer for FinCEN rules. And we can agree with each other that those aren't signers in that clear sense. They are digital signers, portal signers, because digitally they can enact a transfer by themselves or in conjunction with another person. And the rules, the laws and the regulations that flow from them are the ones that govern.
And then digital signers too, you can expose your organization to more fraud than a physical signer because you don't have those signature cards on file necessarily for those persons or all the, identification information that they may collect on an actual physical signer may not be present in the back end on those digital signers. So that's just something to keep in mind. It's another point where fraudsters might be able to gain entry. And I think something about bank portals, and if you're using those extensively or exclusively, is that, as you know, the level of functionality within the portals can vary. It's different by bank. It's not standardized, but you do have extensive functionality within some of these portals. So learning, having your banker help you train on how to use the portals, get the most out of it, get the reporting you need out of it, is very important if you're going to be doing accurate and timely bank account management in your bank portals. One of the downsides of utilizing a bank portal is, they don't offer single sign-on SSO capabilities, or few do. And so that's something that if you were to migrate towards a TMS or a bank account management system, that could be a functionality that makes things easier, that single sign-on. Anything to add there on the tech integration, Craig?
No.
Okay. And then the great thing about our portal management, and you'd be doing this in your TMS hopefully, or your BAM system if you're using one of those tools, is that you're enforcing those principles of least privilege and you're enforcing those groups that we had mentioned earlier. So you're setting it up on the front end to be nice and clean so that when you get a new bank in, a new account in, a new team member in, you can just apply those roles without thinking about it, and then that way things aren't falling through the cracks and folks are getting visibility to everything that they need, but we're also following our principles of least privileges and our best practices on setting up our structures. And this leads us to our third and final poll question. So what are your biggest challenges in managing bank accounts and portal access? Another all that apply, so please go ahead and check what applies to you and then click submit when you're ready.
So after you're done, go ahead and submit. We are, this is a 50-minute webinar, so We will probably move to the next slides. We'll let them appear on the screen so you have them. And we have more than enough BAMs. I think we're approaching 250. I asked for 200, but we won't carry those extra chat box items to the next webinar, but you will have our thanks for doing that, our great appreciation. So, all right. And just let everybody get a quick glance. Number one, actually exactly tied, managing accounts, signatories and authorization, keeping portal access up to date. Number one, and we have a couple at 33%. The number one is tracking and reconciling multiple bank accounts, and then ensuring compliance with internal controls or regulations. That is, those both show up as 33%, but there's multiple numbers in between them. So we're going to close that, and that'll be sent to everybody. So we really appreciate you responding to all the poll questions. So do you need a BAM system? You came to a topic, webinar topic called bank account management. Do you need a system? Well, here's a few things to consider. You don't always need a BAM system. You don't always need a system that can do BAM. But how frequently are you updating authorized signers? How many authorized signers do you have? So it's usually multiple dimensions that matters. How many accounts do you have? How many signers? How active are you with those changing signers? How many portals are you using? How many users do you have that would comply with foreign bank account reporting? So as you look across the board, do you manage foreign bank accounts? How many bank accounts are opened annually? How many are closed? Do you have a process where people are requesting those? Do you have visibility across the board? So there's a significant number of these items, right? And so is your company actively acquiring other businesses? They're pouring in there. So those are some of the factors. Now, we're not doing a consulting project for everybody in a webinar, but this would be one row that would be a general indication based upon all the different dimensions. Do you need a BAM system? How many accounts do you have? 1 to 25? No, you don't need a BAM system. You have 76 to 125, likely, whether that's in a TMS, a dedicated system. You have 126 plus, almost always that's yes. But as you factor in these other elements, that matters significantly. So that's a quick overview of the answer is not always yes. Do you need a BAM system? You need a method of managing it, but do you need a dedicated system? You have one account, one bank? Absolutely not. But you quickly scale to the point where you need it. And maybe you have 75 accounts, 50 accounts. You could need it depending on how active those things are. And that brings us to the steps to take to move towards effective bank account management. We're gonna pick a few of these. Here's a list for you. Kristen, why don't you and I pick a few? Why don't you go with the odd ones? I'll pick some of the even ones. We'll talk through those.
Yeah, I think, obviously we want to define our objectives before we start any project. And just like that, that's where we'll start, when we're moving towards effective bank account management. What are the goals and the success criteria of the project?
Yeah, number 2, I talked about that a little bit before, which is mapping all your bank accounts. Maybe not all of them, but making sure that there is a view. How do you concentrate funds globally, regionally, or in country so that people understand the flow of funds, how those move, whether they're with ZBA or you have cash pools put in place, so that people can understand that structure institutionally, meaning within your company, not just within your head. And so if you leave, nobody really knows how they work.
Yep. And then that ties right into optimizing the account structure. So aligning with your ideal future state for efficiency. That's, you've mapped everything. Are there accounts you don't need? Do you need to move some over to a different vendor to consolidate things? And then, working and having a plan to actually put that optimized account structure into the real world.
Yeah, the selecting a BAM provider. If you need one, what's the best way to select a bank account management provider? Do you need something specialized? Can you use what's within a TMS? If you have a TMS, there's a number of providers that are really good at supporting things like FBAR, et cetera. There's also third-party services. There's certain companies that do that. Strategic Treasury is one of those that can help run your bank account management activity in addition to FBAR. And so what's the right fit for your organization? That can vary significantly.
Yep. Having that information prepared before you implement whatever your system or process of choice is. So once you're organized and everything's mapped out, getting that data needed to implement your path forward.
I'm going to jump to 10. This is
right to the end.
You can pick any of the other ones, right, if you want to do more. But the biannual data review, you should look at your banking structure every year. But when you look at data, where is our data? That could mean twice a year. It could mean every other year. But this audit of your accounts, your signers, this is a key point of exposure and key point of cost. And there's lots of reasons why you have signers on that you don't expect to have, and why you have accounts that haven't closed. And so this audit or this review should be done twice per year.
And once you've done it the first time, you can keep those procedures in place, and it goes much quickly. The following year or the second time you have to do your internal audit.
Some people may prefer semi-annual, but I like the optionality of biannual, right? Every other year or twice a year. So we're meeting twice a year. Yeah. Anything else on this, Kristen?
I think that's it.
All right. We are in the home stretch. Final key takeaways.
Yes. So data readiness and governance. We've talked about this. We want to perform those audits for accuracy and completeness, make sure we don't have accounts floating off in space that we thought were closed, or that are just, as Craig had mentioned in his example, just collecting money and people aren't even aware that it was being missed in the ZBA structure there. We want to have the workflows documented for integrity, compliance, and institutional knowledge.
Excellent. So on the solution implementation side, you're selecting it and then you're implementing it. So if you find a BAM provider or someone who provides those BAM services, make sure it fits what your current needs are and the roadmap ahead, not 50 years, but the roadmap ahead. And that last point, I'll just focus on that for a moment. Do you need third parties to support to set it up? Do you need third-party support to run it during periods of time? Do you need it for overflow, or do you need it on an ongoing basis? And I think those are some really key questions. Not everyone's going to answer those the same way, but think about implementation and ongoing management in that regard.
And then compliance. Not all of us can automate the tracking for things like FBAR and BOI and KYC, but if you can, good idea to do that. Otherwise, do you know that you have the processes in place? Can you find that information fairly easily? If someone asks for it, or when the time comes to file those documents, and then having those defined process controls and making sure we're following, roles for signers and that they've been assigned properly, and that folks can limit the amount of fraud by having process controls and roles clearly defined.
Yeah, one of the questions. Thanks, Kristen. One of the questions came up is what are some of their systems out there? Some of the TMS systems like Kyriba, G Treasury, and others have those. What are some of their major BAM system vendors? You may be familiar with people like TIS as one of the vendors. Wyland, which has been absorbed into another platform, exists. There's multiple other systems. So ION and FIS have IBAM and EBAM as standalone systems or integrated with their system platforms. So there's more as well. We're not trying to give you an exhaustive list today, but wanted to give you a little bit more since we see some of the chat. And Kristen, thank you, and we'll turn it back. And thank you each for listening, and we'll turn it back to Brian for a few closing comments.
Thank you, Craig. Thank you, Kristen, and thank you everyone for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. And for more, be sure to download the Leading Practices in Treasury ebook by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.